The market today had some indefinite directional information. For example, we saw in the Dow that it was setting up for a nice scoop pattern. Had it closed near the top end of the trading range, that would have told us that there might be a good slingshot effect going out to the upside. However, even though the Dow was positive, it closed above the T-line. It gave back half of the move that it had created today. This still, with stochastics in a flat trading range, still puts us in a kind of a no man's land analysis, where the sideways mode is still the predominant mode. At the same time that the Dow was up hefty, the Nasdaq came back down. It traded below the T-line as well as below the previous day's close. So this is still showing us we're in a downtrend. The Dow showing that we're above the T-line, we should be in an uptrend, and the S&P 500 right there in the middle. So there's really no direction to this market, which is an analysis. There's no direction to this market. That means you still should have long positions as well as short positions in the portfolio. The nice thing about candlestick analysis is it allows you to pinpoint which charts should be showing bullish sentiment and which chart should be showing bearish sentiment. For example, BONT has been on our watch list for the last few days because it was right here at the 50-day moving average, creating dojis in the oversold condition. These are all conditions to make up for a possible reversal. It started trading positive today on early morning trading and had a very nice day to it. We illustrate this because this information right here is what occurs over and over and over, putting the candlestick investor in high probability bullish situations. And knowing what type of chart patterns create the possibility of a strong price move in the near future helps the candlestick investor get into positions where the probabilities are greatly in their favor. For example, SEM doing a slow curve and now broke out through this upper level. This gives us the impression that this slow curve now has the possibility of breaking this stock price out, not to where we might know where it should go, but we should know it will probably move in a high profit, a high probability direction. This is not rocket science. This is merely taking the information that the Japanese rice traders have demonstrated to us year after year, decade after decade, century after century, that this is the type of thing that happens in investor sentiment that occurs over and over again. That'll be it. We'll see you in the chat rooms.